What's up, guys? Welcome to Bullish Bets. On this channel, we cover all things related to stocks and investing. This video, we're going to talk about Upstart, the AI lending platform. Keep in mind that we're not financial advisors, and this video is for entertainment purposes only. Make sure you do your own research before making any investment decisions. So Upstart, as of March 18th, had a 100% price jump from around $60 to a high of $121. Right now, it's at $115. And this is concurrent with the time their earnings report came out. And there's a lot of misunderstanding as to how well the earnings report did. They did pretty well in the earnings report, but it does not justify a 100% jump in price. Their expected earnings per share were supposed to be 2 cents. It came out to around 7 cents. So let's look at Upstart's revenue in terms of their 8K in Q4. So the revenue came out to be $228 million in end of year 2020 versus $159 million 2019. This is around 50%, 60% growth in terms of revenue. And if we compare the third quarter, it's around a 30% growth. 2020 did $84 million. In 2019 Q4 did $61 million. Now, the net income for 2019 Q3 was higher than the whole year of 2020. So does it really justify the jump that it had in terms of Upstart? In our opinion, it doesn't. And the reason is there was other news that came out concurrent with the earnings report and this price jump. And before we talk about that, let's talk about Upstart as a business model to really understand what's going on. So Upstart. So according to their S1 that was filed around a couple months ago, they are a leading cloud-based artificial intelligence lending platform. Artificial intelligence or AI lending enables a superior loan product with improved economics that can be shared between customers and lenders. Our platform aggregates consumer demand for high-quality loans and connect it to our network of Upstart AI-enabled bank partners. So what they're basically are loan originators that find the best consumers that need loans compared to what banks are doing right now. Banks traditionally rely on FICO scores, which was created around 1989. It's a really outdated and ancient way of determining whether someone is creditworthy. Some people might come out of college and never had a credit card in their life, but they have a good job. But due to that reasoning, it takes time to build a good credit score. They're not able to procure credit to potentially buy a car or potentially buy a house. And Upstart solves that by incorporating more than 1,600 variables and constantly improving their AI platform to really understand who is a good credit and who's not. They have over 9 million repayment events to calculate this information. So this is more of an exponential type of learning machine. The more credit it facilitates and the more repayment it offers, the AI is going to learn better in terms of who is a good credit and who's not. So the product's only going to get better over time as it's used more. And on top of that, the FICO score is going to become obsolete. More banks are either going to create their own artificial intelligence platform to compete with Upstart, or they're going to have to use Upstart. So let's talk about 3 key benefits that Upstart have over traditional lending methods. Upstart is better at assessing risk. By being able to assess risk, they can lend to a larger base of customers. So according to their website, 4 in 5 Americans have never defaulted on a credit product, yet less than half have access to prime credit. The implication is eye-opening. With smarter credit model, lenders can improve almost twice as many borrowers with fewer defaults. It's saying the market isn't tapped into because normal lenders don't lend to people who are actually good credits with bad credit scores. A lot of people pay things on time, but credit score takes time to build up. So the Upstart model versus traditional bank models shows that there's 75% fewer defaults at the same approval rating. So this shows that Upstart does a great job in finding credit-worthy consumers. If the large US banks want to maintain the same type of risk profile, Upstart can lend to 173% more consumers versus large traditional banks. Their methods of using credit scores, underwriters, loan originators, and so forth. On top of that, it's also faster. 70% of their origination is automated. They don't have to go through the bureaucracy of getting an originator, writing the loan, having the underwriter check the loan, and so forth. On top of that, this saves money for institutions, and they could potentially charge less for origination. And they don't have to hire people to look at credit scores or pay the credit rating agencies, because they have a better system of finding consumers and to borrow. But right now, for Upstart, their main source of revenue comes from bank referral fees. They in a sense right now are acting as loan originators who are finding credit-worthy consumers for U.S. banks, and the banks pay them a sum of money. Because the upside is banks don't have to pay as much because it's less costly for Upstart. On top of that, once Upstart builds a longer track record of originating loans that have lower default rates compared to FICO score screening and the outdated methods of finding a credit-worthy borrower, it's going to experience exponential growth because the lending industry is a cutthroat industry. Banks are willing to essentially cut each other's throat based off 1 basis point, 10 basis points. Each percentage point is very important, and the default rate for Upstart is a lot lower. And on top of that, if the default rate is lower, they can give better lending products in terms of lower interest rates, and more people are going to lend from these banks if they have lower interest rates. And it just speeds up the economic process of lending, and it's going to stimulate the economy. Now, we're going to talk about some of the risk of Upstart. Let's go back to their S1 because they state their risk pretty well. There's a long range of risks that Upstart states, but I want to name a few that really stick out. Thing is, Upstart is working as a loan originator for banks. If banks choose to stop working with Upstart, the revenue is going to go belly up. And it takes time for Upstart to potentially convince a financial institution to work with them, because financial institutions move like a dinosaur. It moves very slowly. It's archaic, and that's just how it works. The financial institution is hard to change. On top of that, the AI platform hasn't really been tested in all economic cycles. It's been tested with maybe 2010 in terms of the downfall there, but it hasn't been tested during extreme down cycles like depressions, other recessions, the bubble in terms of a tech bubble and so forth. It's only been through a short phase, and once it retains more data and information to make credit decisions, it's gonna grow exponentially. And once it figures that out, and if it doesn't have any huge hiccups, it's gonna do very well. On top of that, lending business is highly regulated. The high regulation of lending can lead to institutions and government pushing out Upstart. If they have one hiccup that causes an event that the government doesn't like, they can be regulated out of the industry, and this is potentially very scary for Upstart as a business model. So let's talk about the new changes. What's really causing the price jump of Upstart to around 97% now? Upstart, in concurrent with the time of the earnings report, announced that they're going to acquire a software company called Prodigy. So Prodigy is essentially an e-commerce platform for cars. According to Yahoo Finance, Prodigy is the first end-to-end sales software that bridges the gap between how dealers operate and the new way that people are shopping for cars. And with this acquisition, Upstart opens itself to a new market and makes a lot of connections with a lot of these dealers in the world that requires a lot of credit facilities. In September 2020, the first AI-enabled auto loan was originated on Upstart's platform. So they're looking to get into more auto loan space compared to more traditional loans for mortgages and so forth. The auto loan market size right now, overall, Americans owe nearly 1.4 trillion auto loan debt. The debt makes up 5% of American consumer debt. On average, Americans take out about 56 billion across 2.3 million new auto loans each year. Americans borrow on average 34,000 for new vehicles and 21,000 for used vehicles. So there's a lot of loans out there in the market. So what Upstart can do is originate loans for these people at a lower cost with their efficient AI system that can save people money, which in a sense is going to make them money as they originate auto loans. So this is what gives Upstart this new valuation of 8.3 billion. It's putting itself in a market where there are over 1.4 trillion loans. Whether that be refinancing, new financing, Upstart has a lot of room to grow in the auto financing space. And with the connection, with the acquisition of Prodigy, it's going to have the connections to auto dealers that want to sell cars, need to sell cars, but need a trustworthy loan originator. And that can be Upstart. This is their foot in the door in terms of the auto industry, and it's going to be huge for Upstart. This is just the beginning of the growth, in our honest opinion. The lending market is huge, and with this chess move, Upstart is going to potentially be very huge in the new economy, and it's going to grow exponentially. So let us know what you guys think in the comments below. Do you think that it was just a correction in stock price with combination of the earnings report being better than expected? Or do you think that the acquisition of Prodigy is what is the real catalyst that caused the price jump from a $46 low to a $118 high? So that's it for this video. If you liked our content, please give us a thumbs up. We use this as feedback as to whether we're making content worth watching. Thank you again very much for watching. And if you like this video, check out our page and see if you like other ones. Thanks.